California's homeowner and auto insurance crisis gets worse. Coming up, we'll tell you about the latest bad news and why politicians continue to lie to you about why the crisis is happening in the first place. Plus, they want to impose an insurance tax on you, a penalty. All that and more, and how we're fighting back coming up. I'm Carl DeMaio, chairman of Reform California, and we've been covering the growing insurance crisis in California. For homeowners, they're having their fire and hazard insurance canceled, not even able to get insurance from any private carriers. And of course, auto insurance rates have spiked up dramatically. We have some really bad news to update you on the increasing rates that you're going to be paying for insurance very shortly. But let me tell you, the politicians are flat out lying to you, as are their enablers in the liberal media in California. They're trying to falsely claim that insurance is in crisis because of climate change. No, climate change is not driving the insurance crisis. The failures of the bad policies of politicians, that's what's really causing the insurance crisis in California. And we have the receipts to prove it. We've done a number of videos delving into this topic. I'll give you the brief highlights of why the politicians are to blame, not climate change, in just a moment. So let me just update you on what's going on in case you haven't been smacked yet with this crisis, because hundreds of thousands of Californians have had their insurance canceled just in the last 6 months, as insurance companies announce, we're leaving the state, but not really. More on that in a moment. And so people are now starting to wake up realizing, ooh, something's wrong. I'm losing my insurance, and whatever insurance I can get from the government is 3 to 5 times what I was paying previously. I can't afford it. And so we actually have people calling in to Reform California who are desperate. And I really feel for them because they've been put in a bad spot by these politicians. The retirees who are on fixed income, when they get their insurance dropped and they have to go into this high risk pool that the government runs called the California Fair Plan, I nickname it the unfair plan, their insurance typically will go from $2,000 a year to $10,000 a year. Now, for any typical homeowner, that's a sucker punch. That's really painful. But to people who are retired and on fixed income, maybe just living on Social Security or a modest pension, that is life altering because they may be forced out of their home because of their insurance. I remember all the stories that our friends at the Howard Jarvis Taxpayers Association would tell me about the 1970s. I was very young. I wasn't even paying attention to property tax notices at that point. But the stories I heard, and it's all documented in history, is that people were actually being priced out of their homes because their insurance rates would, because their property tax assessments each year would spike year after year. And those retirees were being literally forced to sell their homes and lose everything because of the property tax swings. And that's what brought about Prop 13. Something similar is happening right now with this insurance crisis as the insurance rates that homeowners have to pay spikes. So that's the nature of the crisis. Insurance companies are claiming they're leaving California, but they are not actually interested in leaving California. They're saying that because they know the politicians created a crisis. They want to light a fire under the rear ends of politicians. They are losing money. Legitimately, these insurance companies are losing money on policies in California. I'll tell you why in a moment. And so they are announcing, we're leaving. I got my bag packed. I'm leaving the door. See, my luggage is right here. I'm walking out, because they're trying to get the public to understand there's a crisis and try to motivate politicians to act. And they want to basically grease the skids for massive increases in rates, because people are going to be thinking, well, I'm lucky to get insurance at the end of the day. So even if it does cost me $10,000 versus $2,000, at least I have insurance, because I was fearful that they were leaving. Again, you do not have to be sucker punched with these insurance rates increases, and I'll tell you why in a moment. So let me move on from the insurance companies leaving California to light a fire under the politicians to why are we seeing an insurance crisis in the first place? It's not climate change. The media and politicians like Gavin Newsom repeatedly come out and say that because of catastrophic wildfires, we are having an insurance crisis. Liars, gaslighters, frauds, they're lying to you. The data is overwhelming. We do not have an increase in the number of fires. Climate change has not impacted the number of fires. Now, the severity of certain fires is more because not climate change, because climate change would indicate that more fires are being, are happening. No, the severity of individual fires, the same number of fires, is higher, and the risk profile in certain acres of land is much, much higher, not just certain, a lot of acres of land, because politicians, not climate change, politicians chose not to allow the thinning of forests, not to allow proper forest management. Because the enviro wackos said, oh, there's a fairy shrimp over there. There's the spotted owl. Whoa. And as a result, the risk profile is higher. And when a fire occurs naturally, the same number of fires, not an increased number of fires, but the same number of fires, it's harder to contain. You follow? That is a failure of politicians on lack of forest management policies or negligent forest management policies. It's not climate change. Because they want you to think that it's climate change because then you blame yourself for driving a carbon-based fuel powered car. Or that you won't blame them for them screwing up forest management policies. And by the way, fires are not a big factor in insurance claims. Leaky pipe in your home is the number one claim for insurance damages from homeowners. And climate change didn't cause leaky pipe. No, it's just simply things that happen. Insurance rates are set based on something called an actuarial model. It's where smart mathematicians get together, and they've done this for almost 100 years. And they study the number of losses, and they say, well, based on the number of losses, how many more losses do we predict will happen in the next 5 years? And they're pretty spot on predicting earthquakes and floods and fires and all that stuff. The insurance models have not been off on predicting the number of loss events. Okay? So climate change is not a factor. Where are the insurance models off? It's in the second part of their actuarial model, which is what is the dollar value of replacing losses? So the first part is how many loss incidents, leaky pipes, earthquakes, floods, fires, how many of those things will happen? The second part of the model says, and what would be the dollar value of making the homeowner whole? Or in a moment, I'll talk about car insurance going up, making the owner of the car whole because they got in an accident and their car was totaled. The dollar value replacement is spiking because inflation. Everything is off the charts more expensive in construction, appliances, drywall, timber, even used cars. And so that's where the premiums that were set based on this actuarial model, because the actuarial models are used to then set the premiums that they will charge you, the insured party, the driver or the homeowner, and they try to add a profit to that. So that is your basic insurance math. And the real issues that are going on there, the liberal media and the politicians aren't telling you the truth because they don't want you to think that they blanked this situation up like they did. So that brings me to the bad news. Rates are going to go up. You're going to get your insurance dropped. I've been telling you that for the past 2 years, increasingly warning you for the last 6 months on this show. But now another sinister element has come about. And that is because the Democrat politicians in the state of California have decided to not only approve rate increases on you through insurance rate models, and I don't fault the insurance companies that they're going to go bankrupt if they're not able to cover the losses. So they have to figure out how the premiums can cover the losses. And we have a better solution than increasing your premiums in just a moment I'll talk about. That's what we're fighting for. But the Democrat politicians not only want to just simply increase your insurance rates, they are looking at authorizing, and this is breathtakingly shocking on one level. Legally, it's shocking, but from politicians wanting more money, it's not. They want to authorize an escrow type system for your insurance, where you're told up front at the beginning of the year, here's your insurance premium cost. Then at the end of the year, if the premiums don't cover all the losses in your insurance risk pool, you get hit with a one-time emergency assessment, a lump sum assessment. Think of it like your escrow account in your mortgage. You pay your mortgage each month, and a portion of that goes to escrow for insurance, property taxes, et cetera. And if your escrow account somehow got it wrong in terms of the calculation, then you get a notice at the end of the year saying, oopsie, your escrow account doesn't have enough money. You have to do a one-time payment, or we're going to increase your rates automatically going forward on top of whatever the insurance the interest rate adjustment might be. And so the politicians are looking at imposing an emergency insurance assessment at the end of the year to force you to pay up when your premium doesn't cover all the losses. I am absolutely opposed to this. You should be too. It's a blank check, and it will crush working families. We will already see higher insurance rates. Now you're going to see a special tax, but call it what it is. It's a tax, an insurance tax. And by the way, you already pay a 4% across the board insurance tax on all of your insurance premiums. Right now, the government is taxing you on your insurance. More on that in a moment in terms of our solution. And so let me share with you auto insurance. California auto insurance premiums soaring 54% this year. There's a chart nationwide. Now, if you notice, this is particularly damaging in California, where we're at 54%, but most states are seeing double-digit insurance rates increases. Now, remember, the politicians just got done telling you that insurance as a crisis is being driven by climate change and the number of fires. Did the number of fires and climate change make people worse drivers too? I mean, bitch, please. I mean, sometimes it's so easy to expose the absolute dishonesty of the liberal media and the politicians on important issues like this one. They're lying to you. Because if climate change were the reason for your homeowner's insurance going higher, which it's not, we already walked through the actuarial models and the fire stats, then why are insurance rates going up 54%? For the same reason I just told you. The replacement cost on cars when you total your car, and the labor costs and equipment costs for replacing things on a car that's not totaled massively increased because inflation. It's what we've been talking about nationally, but particularly in California for the last several years since the politicians, spent all that money in 2020 when they shut down the economy. So insurance is going up 54%. Get ready for that. At Reform California, we have a better plan. We released our insurance stabilization and reform plan, and it's a three-part proposal. Number one, we believe that we have to get to the root cause of why insurance is so expensive in this state by slashing costly regulations on both insurance as well as construction. Because if it's the construction cost inflation that's driving a lot of the insurance premiums going up, we've got to flatten and reduce the cost of construction in this state. And by the way, just so you know, that will also help us with our affordable housing crisis because it's a dual failure of government politicians. Second, we have to fix fire management, which means that we have to start thinning forests. And I'm calling for a Marshall Plan style effort, basically a timeline, a time certain by which California bureaucrats are going to have to hustle and clear those forests and reduce the load of risk on all those acres. We also need to make sure that fire management is empowered to the homeowner to allow them to, without any threat of lawsuit from the Fish and Wildlife Services and all those enviros, clear defensible space. Third, we need to stabilize rates. You should not be the one paying for the failure of government. They caused the crisis. They should pay for it. So I'm calling for an immediate moratorium on your 4% insurance tax. That's a 4% relief right off the bat. Not enough, by the way, but it's a start. And secondly, we have a multi-billion-dollar climate change fund that you pay for through the higher gas prices that you pay and electricity bills you pay. I believe that because the politicians screwed up fire management, that we should actually force them to compensate for their failure, that the risk, profile in some of these acres of land and habitat is higher, that's factored in your insurance rates, that they should pay you a $3,600 annual, up to $3,600 annual rate rebate for insurance to stabilize your costs. And the reason why I want to do that is if you force the politicians to pay for their failure, it forces them to actually be accountable for cleaning up their mess. If you're paying for their failure, they will never fix their mess. Finally, I do believe that because this is a national issue, we should be talking about solutions on reinsurance programs nationally to spread and to hedge against risk for insurance companies. And that's something that the insurance industry is looking for, reinsurance flexibility, and it will save ratepayers as well. That's our 4-point plan for insurance. 3 points, by the way, are in California's control. The 4th point is a national issue. I really need your help to spread the word about this and to support this insurance reform and rate stabilization plan. Please contribute online at reformcalifornia.org. That's reformcalifornia.org. And those of you thinking about rent control, the insurance crisis is another reason to vote no on Prop 33, which is the rent control measure on the November ballot. Can you imagine capping rent increases and then getting a sucker punch for the landlord with a 50% or 70% or 100% increase in insurance on all those apartment units? The landlord will go bankrupt. We will have a major housing crisis in this state just on the basis of the insurance and a rent control cap. So I'm just giving you a warning about policies that are connected. When you vote for something, you think, oh, we're going to get rent control, when in fact it exacerbates the cost of rents, it makes them spike. And with this insurance crisis, landlords will be capped on rent, but their insurance and other costs won't be capped. That will lead to those landlords selling, those landlords converting apartments into condos, taking them out of the rental market, and many property owners simply going bankrupt. It would also increase the price for new renters because rent control only protects people that are already grandfathered in, not the new renters who are trying to seek an available unit. Then rent control starts from there. So again, Prop 33 and the insurance crisis, people aren't making connections between the two, but there's obvious connections, which is why we urge a no vote on Prop 33 in this upcoming election. By the way, please sign up to get our voter guide in the November election. We'll send it to you October 1st, right before your ballot arrives. It gives you a plain English description of everything on your ballot, including makes endorsements in key candidate races. Sign up at reformcalifornia.org. On the bottom of that page, first name, last name, email, phone, and zip code. That's a lot. Bad news on insurance, but we're fighting the good fight to stabilize rates, shield you from paying higher increases, and to force a fix to the problems that drove the crisis in the first place. Until next time, Carl DeMaio, Chairman of Reform California. Help us break through the censorship of the liberal media. Like this video, subscribe to this channel, and smash that notification button so you can stay up to date on all the developments in California news and politics. Also, please visit the website, reformcalifornia.org, for ongoing news coverage and to join one of our campaigns in the fight to take back our state. If you can, please sign up as a volunteer or chip in a contribution. This episode of Reform California with Carl DeMaio, paid for by Carl DeMaio for State Assembly 2024.